The economic world is on alert. Recently, the Federal Reserve, Fed, the central bank of the United States, sent a clear signal that could indicate a significant change in the global financial landscape. The possibility of a weaker dollar in the near future. But what does this mean? How does it affect your investment portfolio? And most importantly, how does it impact the cryptocurrency market? In this video, we will analyze the Fed's signals, understand why a weaker dollar may be coming, and explore how cryptocurrencies can benefit from this scenario. If you want to know how to protect your money and seize opportunities in this time of uncertainty, keep watching. What did the Fed say? The Federal Reserve has been one of the most influential institutions in the global economy in recent years after a series of aggressive interest rate hikes to combat inflation. The Fed now appears to be changing its stance. In its latest statement, the American Central Bank suggested that interest rate hikes may be coming to an end and that future cuts may be on the horizon. This change in tone is a clear sign that the Fed is concerned about economic growth and may prioritize economic stability over controlling inflation. When interest rates fall or remain low, the dollar tends to weaken. This is because currencies with higher interest rates attract more investors, while low interest rates reduce the dollar's appeal as a safe haven asset. But why does this matter to you? Because a weaker dollar can have profound implications for a variety of markets, especially for the world of cryptocurrencies. What does a weak dollar mean? A weak dollar does not necessarily mean that the dollar will lose all of its value, but rather that it loses strength relative to other global currencies such as the euro, the yen, or even assets such as gold and cryptocurrencies. When the dollar weakens, US exports become more competitive. Inflation can rise, eroding the currency's purchasing power. Investors start looking for alternatives to protect their wealth. This is where the role of cryptocurrencies comes in, especially Bitcoin, which many see as a digital store of value, the so-called digital gold. Impact on cryptocurrencies. Why does it matter? The weakness of the dollar can be positive news for the cryptocurrency market. Here are some reasons why. Flight to alternative assets. When the dollar loses value, investors often seek assets that can serve as a hedge against inflation. Bitcoin, in particular, has been promoted as a decentralized alternative to traditional fiat currencies. With a fixed maximum supply of 21 million coins, Bitcoin is seen as a hedge against monetary devaluation caused by expansionary economic policies. Increased global liquidity. A weaker dollar could prompt other countries to diversify their international reserves, seeking assets that are less dependent on the dollar. This could open the way for cryptocurrencies to gain more relevance in the global financial system, especially in regions where local currencies are unstable. Inflation and loss of confidence. If inflation persists while the Fed keeps rates low, confidence in the dollar could wane. In this scenario, investors could shift to digital assets like Bitcoin and Ethereum, which offer transparency, security, and censorship resistance. Institutional adoption. Corporates and institutional funds may also see a weaker dollar as an opportunity to increase their allocations to cryptocurrencies. Giants like MicroStrategy and Tesla already have large positions in Bitcoin, and other companies could follow suit. Risks and challenges. While the prospect of a weaker dollar is positive for cryptocurrencies, it is important to recognize the risks involved. Volatility. Cryptocurrencies are extremely volatile, and any sudden market movement could result in significant losses. Regulation, governments, and central banks may step up their efforts to regulate cryptocurrencies, especially if they begin to threaten the dollar's dominance. Speculation. Much of the movement in the crypto market is still driven by speculation, which can create temporary bubbles. For this reason, investors should always do their own research, DEO, before making decisions. The signal sent by the Fed suggests that we are entering a new economic phase where the strength of the dollar may no longer be guaranteed. For the cryptocurrency market, this could represent a unique opportunity for growth and adoption. However, as with any investment, it is crucial to balance optimism with caution. If you're thinking about getting into crypto or expanding your current position, keep an eye on the Fed's next moves and global market behavior. Also, stay tuned for news on institutional adoption and technological developments in the crypto space. If you found this video helpful, subscribe to the channel, like it, and share it with your friends. Let me know in the comments, do you think a weaker dollar could benefit crypto? See you next time.